After Q4 FY21 numbers, Mahindra & Mahindra shot up by more than 2%. The numbers were a beat to the market expectations in terms of revenue, EBITDA and margins, but the profit missed estimates, and the company this time also recorded an exceptional loss of 840 crores. Let's go into the details and find out how these numbers was and how was the growth for Mahindra & Mahindra. In the headline numbers, the revenues were up 48% on YOY basis, the number at 13,338 crores versus an expectation of 12,700 crores. So there was certainly a beat. In terms of EBITDA, the company recorded a number of 1,960 crores versus an expectation of 1,833 crores, and this was a growth of 60% on YOY basis. The margins shot up from 13.6% last year to 14.4% this time, and like I mentioned, the company recorded an exceptional loss of 840 crores. So adjusting to this exceptional loss, the company's profit before this exceptional loss was up 210% on YOY basis, and the number at 1,002 crores versus a figure of 323 crores last year. But adjusting to this, the company did see a turnaround in terms of profit after tax, because this time the company reported a profit of 163 crores versus a loss figure last year. So these were the headline numbers in which the company recorded an exceptional loss of 840 crores, which was due to the impairment provisions for certain long-term assets and other exposures the company recorded in their books. Now coming back to the management commentary, that was quite very strong this time, and after the results we talked to the management and they shared a very positive outlook going forward. Starting with the highlights of how the various segments perform. So Mahindra & Mahindra has two segments. Firstly is the farm equipment sector, and secondly it caters to the auto sector. The company highlighted that in the farm equipment sector, the revenue was up 60% this time, and along with that, this was the highest ever fourth quarter domestic volumes, and also profit before interest and tax, and also the margins were also quite up. In the auto sector revenue, that was up 43% in the Q4 FY21 with a strong booking pipeline for its key products. However, the company highlighted that the supply constraints, that we all know that there are supply constraints related to the global chip shortages, has impacted the production and also the sales. The input cost pressures continue to remain high, putting pressure on the margins owing to the commodity inflation that we are seeing, and also the semiconductor issue still continues to put pressure on the supply chain. So this was a little bit of negative commentary coming in from the management. On Q-on-Q basis, if we compare, then the automotive revenue was down 5.5% and also the farm equipment revenue was down 5.8%. But as we know that since a long time, Mahindra & Mahindra has been doing the capital allocation. They have been adjusting that, and due to that they say that the exceptional loss this time has significantly reduced. They are in the final phase of impairment of their capital allocation policy. Classification of our business into the A, B and C categories has now completed. All their core business such as the tractors, farm equipment and the auto remain in the A category, and they all have seen a good growth in the core sectors, and they are very optimistic about the Q1 earnings coming ahead. Commenting on the future outlook, they have a sense that the demand in the rural market is getting back slowly. The recovery in the demand is likely to be more aggressive than the last year. So this is a very well point to be noted, and they also say that they expect the tractor demand to start returning by the June and the UV demand to be back by July. The tractor growth this year to be in the single digit, given they had a strong base last year, and in the UV segment they expect a strong revival across their models, as all their models are seeing a very high demand currently. So Mahindra & Mahindra, after a strong set of results and also a very positive management commentary, was up 2% in today's trade.